Okay, now we're live.
Oh, yeah, okay. Thank you. You guys are giving me shit here.
I can't deal with like user
Kyle,
error.
I was on your
told
side.
you Jay should not be in charge of this.
I was there.
Yeah, AJ, thank you for having my back.
I thought I just
looked.
needed. I thought I just needed to hit the go live button on Riverside. I had to hit it on YouTube also.
Okay, now you got to turn off your shit because now we're like.
Now we know we're live. All right.
All right, so are we going to do an intro or not? Because I've been talking about this all day and nobody
No,
picks me up.
just
We
clip,
usually do an intro.
something here. Like we'll take like a question from somebody or like, and we'll use that as the intro.
Nobody's going to show up to this thing.
Or we could use that whole fiasco of when you thought we were live and you thought calling me a rookie when I was actually right. We could use that as the intro where it shows you're wrong.
I assumed, which is a big mistake, that Jay was competent and knew what he was doing, and clearly he didn't know what he was doing.
Oh, there's a delay. There's a delay. You're a rookie. There's a delay.
Given how long you've known me,
Very serious podcast.
if you didn't know I was incompetent, that's on you.
We are really good at this.
This is going to be a disaster.
All
right, moderator, are you going to gain control of this thing or what?
Come on, Kyle.
Well, are we just going to get right into it? Or are we going to?
You're the moderator. You tell us.
Yeah, you're supposed to be.
Well, let's take a couple questions right off the bat. We have a question from Mauricio. Is your book going to be coming out in audio form at any point?
Wow, I'm getting that a lot. I actually talked to the man himself last weekend, and Ken told me, because it's published by Ken McElroy, Kenny told me I should do it. So I am going to do it. I'm going to publish it audio. I'm going to record it myself. And I don't know how long. AJ, how long does that take? You're the book expert. No, Jay, you're the book expert. You've written 134 books. How long does the audio take to record and produce?
It depends on who you have doing it, but once you get them the final draft of the content and they start recording a week.
Did you do your audiobooks, Jay, or did you have somebody else record them?
No, BiggerPockets has a third party that does it.
Yeah, so I'm definitely going to do it, but I'm going to record it myself. I think I got to go into like a studio and do it. I can't just do it in my, in my backyard in my underwear. I got to actually go somewhere. But yeah, it's going to happen. Great question, Mauricio, by the way. That's an amazing first question.
And Mauricio, stop writing your own things in the chat. Like you obviously created this fake account called Mauricio's Biggest Fan, and then you wrote, "My life has been changed by this podcast in more ways than one." So you just like we don't need to make up our own screen names to make it seem like everyone loves us.
Should I, instead of doing that, should I grow my beard really, really long and look really weird?
You couldn't grow a beard. Let's be honest.
Sorry.
That is true.
I would love to see a beard off between Jay and Mauricio.
Put the guys with beards on top. I'm just saying.
Yeah, it just automatically happens. Am I at the top there on yours too? It goes me, then AJ, then Jay, then Mauricio. I feel like that's just like AI is doing that for us.
Natural.
I heard Jay was trying to grow a beard, and did it work or was it just white? What was the issue with it?
No, I can grow a beard. It's just I hadn't let it grow out for a couple years now, and I let it grow out the last 2 weeks, and today it was just like 90% white.
Show me a picture with you a beard. I do not believe you.
I've never had a beard, but I've had a good bit of stubble.
No, yeah, okay.
I had hair on my dick.
You know what I picture for Jay? I picture with Jay, just that little dirt patch underneath the chin, like underneath the lips. I feel like that's what Jay could do.
Okay.
I just noticed all you guys are wearing collars today. Was that like you've never worn collars in all 52 episodes, and because you're live, you feel like you got to dress up a little bit, and now you're wearing like a collared shirt or something? What's going on?
Yeah, it's a special.
I don't think I've ever
edition.
not worn a collar.
It's a special edition.
No, that's right. No, I tell you, AJ's right. But Kyle wears like a freaking beat up, whatever he finds inside the laundry basket, and now he's wearing like a nice polo.
Well, I like to keep the t-shirts usually nice and tight for the ladies. So that's I just switched it up. My wife's gone for the day, so like I had no one to show off for.
Everybody's focused on your beard right now. Nobody's paying attention to anything else.
It's nice, right? I know you're jealous. I didn't bring the comb though to outcomb AJ. All right, we're gonna get into this.
You guys,
we good?
We're drinking. Let's go.
All right,
let's do it. We're talking about Trump. Is that today's
Jay,
episode?
What episode are we, Jay? 53? Is that right?
53. It's on the screen. It's on
Where?
the screen.
top.
At the top.
Okay, at the top. Well, I got
Real
fucking
Estate episode
15 screens open right now with the YouTube live and the chat from Alex and the prediction spreadsheet. Like, it's on the screen. Okay.
By the way, a shout
All
out
right.
to Alex, who's actually acting as our producer today. Very, very impressed and I feel really like it's a legit production that we have a producer that's behind the scenes. So if you guys have questions,
Literally right here working on it. See?
There we go. Yeah, cameo. Okay. All right.
All right, let's get this show on
Ready?
the road. I got to leave. I got a hard stop at the bottom of the hour.
Episode 53, right? Ow, now, round cow.
And if you're watching this live, tell us what you're drinking. I see Sam's drinking a White Russian.
Ooh. It's better than those black Russians.
I hope my Chilean buddy's in there somewhere drinking Pisco.
Pisco. Oh, yeah, Pisco, the drink that needs to be mixed with soda. All right. Hey there, welcome to episode 53 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and I have the gruesome threesome live here on YouTube. We have, I don't know, probably 2 or 3 people watching live right now, but hopefully people will jump in along as we go along here. But Jay, how's it going over there, man?
Good. We actually have 17 people as of right now.
Oh, wow.
So we're cruising here.
Amazing.
Yeah, but your mom's on. It doesn't count. Your mom.
No, my mom actually I don't think could figure. I think she wanted to be, but she couldn't figure it out.
We already called out Mauricio because apparently there's someone on the chat called Mauricio's biggest fan, and
really?
there's no way that's
is it
real.
really?
So
No.
All right, I gotta go in there. Is there really somebody doing that? I'd love it. Whoever that
yeah,
is.
there's-
DM me.
there's no way that's real. And if it is, your wife her ears are ringing. She's about to jump on the chat right now and assert her dominance. Jay, what are you drinking over there? Or wait, hold on. This is week 3, right? So you said you're drinking triple tonight. So I better see something good.
I've been eating healthy. I've been working out. I haven't been drinking, and I promised I would drink tonight. So here's what we're doing tonight. So I've got a bottle of Frank Family Cab, which is one of my favorite cabs. I'm already a glass in. I have a big container of Sanders Bourbon Dark Chocolate Sea Salt Caramels with real alcohol. Carol actually had to show her ID to buy this. I've got my chocolate truffles with Cabernet Sauvignon. So I'm going the candy and dark chocolate route. And then after I'm really drunk, I need the candy. So I've got some bottle caps and I've got some Peeps, cotton candy.
Wow, you're really prepared. I would love to see the picture from behind your desk now, just to see this setup that you have going on.
I am catching up on 3 weeks of eating healthy and working out. So I'm going to ruin it all tonight.
Just ruin it in one day. Mauricio, how's it going, man?
Dude, I'm gonna snack on the Sabatino truffle crisps. What do you think of that? Look at that. That's just Kyle's gonna love this. I'm gonna crunch on these all up. I'm actually gonna do a little bit of this just to really get things going. But things are good. I'm back on drinking again. I also was on a little hiatus on the drinking thing because I too am trying to look as good as Kyle, the toppest G down there, and I can't grow a beard, so I figured let me replicate his beautiful pecs.
So, are you? What are you drinking? Are you drinking that piss and cola or whatever it is?
I'm back on the wine. I got a little Quilt, who is one of my Quilt is the same producer that does Bell Gloss, which is part of the Wagner family, which does Camus. And I'm trying one of their Malbecs, which I haven't had before. I must say it is delish. Can I zoom it in there? I don't know why it's all out of focus, but it's called the Calistoga Reserve Malbec, and it's delicious. So yeah. But wait. I'm not gonna go crazy like Jay. I have the Corvin, and if Corvin is listening and wants to sponsor the show, we're open to discussions.
AJ, what's going on, man?
Oh, living the dream. I've got my setup here, much healthier than these guys, though. I've got my Sour Patch Kids. And, of course, Diet Coke for everybody's favorite designated driver.
And by the way, I appreciate Doug's comment where he says, "Where's the 2x speed button on this live event?" I do that always on podcasts. So like when I hear people in person, it freaks me out because I always listen to 1.5 speed on the podcast, and when you see them in person, you're like, "What? You drunk? You slurring your words." So I feel you, man.
I get a lot of people who tell me the way I speak naturally is like listening to me on 1.5.
Yeah, you're
Kyle, what are you
something
drinking, buddy?
tough to listen to.
What are you
So
drinking?
I really thought this was like a special event, and I got this in the mail. The Drunk Real Estate Stein from Jay has my name on it, has the logo.
Keep coming. There you go. There you go.
And I can't do that Zoom thing anymore because I have this set focus now. But so I really thought this was a special event and we were all going to drink from this, but apparently not. So Jay has his. I appreciate that, but AJ and Mauricio just did not decide to have it. So since I had a Stein, I was like, I got to drink beer, right? I'm not going to put like wine or like liquor in that. So local brewery, Victory Brewery. It's called Golden Monkey. Great beer. It is 9.5% alcohol. So I made up for it. If I'm going to drink, I'm going to go hard with the beer. So that's what I'm doing. All right. Are we getting into this?
Let's do it.
We do have one request to start off from the username wannabe Ashley Wilson's husband saying, just wondering if you'll be giving any insight on the challenges of marriages while being an investor. So we got to hit that at the end. It's not on the docket, but we will.
He specifically asked,
"Is
it more?
You cut it off short. You got to finish it up. Finish up the whole. Everybody.
Yeah,
can see
he
the quote.
specifically
Just finish
asked,
it up.
is it more difficult to divorce because of the high net worth and multiple investments? And
Well,
yes,
no, it's
the
always a
answer is-
balance, right? That's why you have life insurance, just in case.
the answer is it does make it more difficult for Ashley to divorce Kyle because she does not want to give him half her money.
A lot more than half. Okay, let's get into this. So I'm going to kind of mirror this after last time. If you go back and listen to our last predictions episode, we're going to be hitting a lot of the same stuff. But last predictions episode was a beginning of the year for all of 2024. So some of these are just going to be like, hey, are we going to be updating like our previous predictions? Because technically we're not wrong on the predictions, even if we are wrong, because we have the rest of the year. But there's a few of these that I would say we might want to update. So we're going to start with real estate, since this is Drunk Real Estate, and we're going to talk about real estate best performing asset class. I'm going to go with Mauricio first this time.
Wait,
because
I'm already confused. I'm already confused.
God.
Are we saying? I thought we were done with the predictions, and now we have new predictions from now to the end of the year. You're saying no. These are the predictions from January, and then the question is whether we want to update them.
Well, it's the same thing. Like if you want to do a new prediction, that's an update of the old one. What's the difference? You're just trying to start this off by giving me shit? Is that what's going on? Okay.
Listen, Mauricio,
I'm starting with you, Mauricio, because last time I went to you first and I said, what do you think the best performing real estate asset class was? And you know what you said? Gold. Your answer for best real estate asset class was gold. So I'm hoping this time.
But here's the funny thing. He was right.
He was right. But I'm hoping you have an actual real estate asset class this time.
Yes, I do, and you guys are going to be shocked by my prediction. I don't think anybody's talked about. I don't think we've talked about this asset class in the entire 53 episodes, or maybe we did. But I'm going to go
God, I can't wait
with.
for this.
I'm going to go with tiny homes, because number one, they are actually taking off. I don't know if you guys have been reading about this, but tiny homes is becoming a really great way to cash flow stuff, because they're obviously really inexpensive to buy and they're renting actually pretty high. But it just goes back to this idea of affordable housing. We do have a major affordable housing issue, and people are trying to solve that problem. And whether it's mobile home parks or it's smaller things or co-living. I mean, I've heard a lot about co-living going on lately. But I'm going to go with tiny homes. I'm going to throw that out there.
So how do you measure, like, do they break it up to say real estate went up and they're like, but tiny homes outperformed larger
AJ, I'm
homes.
surprised, being in the self-storage asset class, which was a very disparaged and nobody really thought of it as its own asset class when you started. It's kind of like that. It's like the self-storage of tiny homes, or
So basically, what you're saying, Mauricio, is you're going to pick an asset class that you could find zero statistics
Exactly.
to back up, or to see if you're wrong or right. So when it gets down to the end of the year, you're going to be like, hey, tiny homes did great, and we're going to be like, what do you mean? You'd be like, they just did amazing. They were by far the best. They went up by 36%.
I'm pretty sure that you can find amount of tiny homes sold over the last 12 months.
I'm sure you can too, but how did they perform is different.
All right, Jay, I can already tell Jay get on that. And one of the best parts about this is that we can actually, since it's on the screen, it used to be like every person who was talking. Now all four of us are going to be shown this entire podcast.
Fact checking.
So first of all, what's great about that is you could watch how often AJ combs his beard, and then second, you could see how often Jay just zones out and starts Googling things in the middle of the podcast. So right now, Jay's getting on that, looking up tiny homes.
Since we have a lot of guests,
there are more than 10,000 tiny homes in the U.S. This number continues to rise as the tiny house lifestyle gains popularity. The average cost of a tiny home is $52,000, 87% cheaper than the average price of a typical U.S. home. Building or buying a tiny house requires far less capital.
But 38% more per square foot than full-size homes. So cheaper overall because they're so small, but on a per square foot basis, a good bit more expensive.
Yeah, and 10,000 tiny homes, like the 10,000 tiny homes, that's almost the size of like that small town an hour outside of Philly. That's almost that much. I mean, that's a huge amount.
First of all, we can argue about the metrics later, but all I'm saying is that data is out there. There's data that actually tracks tiny homes, how much they cost, what the value is, what the rents are. So just because, look, there's a great quote that says, just because you don't know how doesn't mean you can't. And I'm going to use it here as well. Just because you don't know how to measure it doesn't mean it's not measurable.
All right. Well, so we'll keep an eye on it. It'll probably be 10,200 by the end of the year. So you get a 2% bump there. It'll be amazing. AJ, what do you got for us?
Well, hold on here. What was the last best performing one?
Okay. So Mauricio said gold. You said single family residential real estate. So actually, I will give you the win on this for the last one because single family has been crushing it. If we all, as you're talking, I'll throw up the Case Shiller to show that you were right. That single family so far. So are you going to stick with that? That it's going to keep going?
I'm sticking with it.
Sticking with it. Any updated reasons, or are you just going to
I'm sticking with it because it's remained so strong at high interest rates, and with the future forecast over the next little bit, I think we'll have some easing on interest rates. But there's been no fundamental change to suggest that it won't continue that I've seen. So I think interest rates lowering will only speed it up.
Fair enough. And then Jay, you went with last time multifamily, and it didn't quite do as good as single family, but I would say it's doing poorly.
No, I mean multifamily is getting better. If I were to revisit that decision right now, I actually agree with AJ. I think by the end of this year, simply because of what's likely to happen with interest rates, which is very little, and we'll talk about that later, I suspect that single family is probably going to have the best year of any asset class. That said, I know you were getting ready to put up the Case Shiller data. I was getting ready to put up the Case Shiller data.
You throw it up then if you got it.
Okay. I was getting ready to put it up, but I didn't because I thought you were going to. But here's the Case Shiller data. The problem we have with Case Shiller data, not that the data's bad, the problem is it tends to be a few months behind. So we just got April 2024. We're in June. So we're about 2 months behind on Case Shiller data, which these days 2 months makes a really big difference. So if you look based on April of 2024 data, we were at 320 for the index, which was, I think we're at 308 when the year started. So we've gone up about 2% since the year started, which is great, maybe 3%, 4%, which is great. But again, that's 2 months in arrears. And I think there's a reasonable chance that since April, we've actually seen single family start to slow down a bit. Certainly in parts of the country, we've seen it slow down. So I still think it's going to outperform most other asset classes, but I don't think looking at the Case Shiller data is necessarily going to be indicative of what we see for the rest of the year because I think that data is already outdated.
So you joining the dark side or what? You joining me?
Yeah. I mean,
right.
I've always liked single family, and it's residential. I mean, I would argue that it's not necessarily I'm buying into single family over multifamily, but just residential in general. I think commercial is still seeing a lot of issues, both in interest rates, and then each individual asset class within commercial has its own issues. But across the board, I think residential is poised to do really well the next couple of years.
Yep.
Can I throw out a question?
Oh God, sure.
Can't stop you.
No, it's really for AJ. This is a serious question. I'm very serious about this question. No, I mean, I tend to agree with you. I mean, the things are going really well in single family, but I saw a stat the other day that the average mortgage payment now on a home is $3,000 a month, which is like, by math, $36,000 a year, based on an average price of 400, I think it's 19 grand, or the median home or whatever. Like, where are people coming up with this money? I mean, it's like it's $3,000. Like it used to be. I think it's the lending standards getting loosened up, because it used to be a third. Your debt to income ratio had to be usually about a third. But if you use the third number and you're spending 36, you got to be making $100K plus to get into.
And Mauricio, don't worry. The transaction volume is picking up. You will be able to afford a $3,000 mortgage payment soon. I've total faith in you.
And that's the thing. Transaction volume isn't picking up that much.
I'm in a tiny home right now. Like I got to really upgrade from my tiny home to a single family.
We're up to 10,001 tiny homes now.
If you took out a few areas, that would be dramatically lower.
It's a serious question.
If you took out a few areas, like if you took out California, New York, right, that would really shape those numbers a lot.
But at the same time, we still, I think I saw a stat that still like 90% of people who own their homes have a mortgage less than 4%.
Yeah,
this is only the new people who are getting these crazy
transactions are down. So
yeah, and transaction volume. Someone put it up in the chat too. Like transaction volume is at historic lows right now.
And that's why prices will go up.
Right, exactly. And so even if we, that was our argument last time, that even if we see some sort of downturn, then a downturn is usually followed by interest rates lowering, which is followed by more affordability for houses. So
yep.
That's why it's a great argument.
NAR came out, as I'm pouring with my Corvette, NAR came out with a stat saying I think 30% of homes are still selling above listing, and there's like multiple offers in every home. So it's still a huge amount of demand relative to the amount of supply.
Yeah, and we've shown this chart before, but it's basically, this indicates that home ownership rate in the U.S. has basically forever, and forever meaning the last 50, 60 years, been stuck between 63 and 69%, which is actually a pretty large range if you consider that 6% over 300 and some million people. But it's relatively small range on the overall scale. And so the question here is, are we going to see, because yes, Mauricio, it's getting a lot more expensive to own a home. We're not seeing that impact value simply because there's no transaction volume. But once we start seeing transaction volume, there's a couple things that could happen. One, we could see prices start to drop, or two, we could just see home ownership rate decline. More people turning their houses into rentals, more investors buying properties, and we see this 65% number that we're currently at drop back to the 63 or even 62, 61%, because there are a lot of people who have been saying for a number of years, including Kyle's wife, Ashley, who's writing a book on this topic, but basically the trends are towards lower home ownership rate in the U.S. So it's very possible that we're not going to see lower home values just because prices are up. It's possible that we see lower home ownership rate.
I could not agree more. You can't fix the problem that we have. Is not something you can fix or fix quick. So we have demand keeps rising. More people need homes, and supply is so far behind. So lower interest rates are only going to skew that even more, not less. So
when you see the argument all the time that all these millennials here can't afford homes right now because of how high the interest rates are. So if it comes down, apparently there's a ton of them just sitting on the sidelines waiting to pounce. All right, let's move on this. I'll finish up. I said retail as that's going to be the best performing asset class. I'm going to throw up some stats about commercial real estate, because we do have a bunch of commercial real estate investors here as far as the values of commercial real estate. So let's see. I got to get this up here. So we follow up. So looking at Jay's prediction with apartments, actually over the past month, The apartment values have actually gone up by 2%. So Jay is not necessarily wrong. It just wasn't the best performing asset class. When I said retail, if you look at malls, they're up 5.3% over the last month. Strip centers are up 1.5%. A little bit of an outlier here. Sorry, AJ. Past month, self-storage down 2.5%. Down 13 over the past 12 months too. So office. To note as well, office was flat over the last month. So hopefully office has maybe seen a bottom. But to that note, here's a
where's the tiny homes in that list?
Tiny homes. Once it gets to 10,500, that's when it starts getting big enough that people start tracking the stats. So maybe this year, maybe you're going to get in there. And then here's kind of a graph of the last 7 years of all these different asset classes. If you want to take a screenshot and check it out, this is Green Street CPPI. Love it. Okay, back to the predictions. I got to make sure I don't leave. I almost left there. How do I stop the share without leaving? Okay.
Click that little button that says stop sharing.
Yeah, they're right next to each other. Next is the worst performing asset class. I said office. I still believe it's the worst at the moment. We'll start with AJ. AJ, you said hotels. Are you still agreeing with that, or you think they're seeing a turnaround?
I think we're seeing a turnaround. So I don't think they're going to be the worst performing this year.
Yeah. So to that graph that I just showed up last time, lodging is up 0.2% in the last month. So it's not negative. So do you have a updated that you think is going to be worst performing?
So I think worst performing. Oh man, I kind of am going between a few areas here. I'm going to go with we're talking just real estate. I'm going to go with
you can say gold.
Multifamily.
You're going to go with multifamily.
I
you gonna back that up, or that's a hot take right now. Let's go. Let's hear it.
Really hot take right now because I see how wrong I can be. Mm-hmm. The only reason I'm thinking here is I'm thinking about the turnover of the assets and refinancing. Because I guess we need to clarify this. What are we judging? Are they talking just rents? Are we talking valuations? Are we talking
I think we're talking valuations. So like the values of the asset.
Because I don't think rents are going to go down, but I think we're going to have a lot of these larger real estate assets turn over. They've been either put off or people have been, they found other deals or whatever it is, but they're not going to be able, and they're going to have to turn over. And a lot of people are waiting for interest rates to come down, and they're not. And when those papers turn over, I think they're going to have people in trouble. They're going from a basis of 3% to 8%. And I think that's going to put pressure on the market. I don't think multifamily, though, I don't think that rents are going to go down at all. When I'm looking at this, I think that's one of the big theses on hotels was just simply that these huge assets that were bought at really, really high prices, they've been able to put off refinance, and now that's struggling, and so they're going to get hit. And I think we've seen that in a lot of areas. But I think what we saw in office, I think we probably hit, the low. I think office, we're probably moving past that. It may go a little further. So my only downside thesis on multifamily is that we're going to have paper turnover, and there's going to be people that are going to get hit as they try to refinance, and they're going to have to restructure, and that's going to affect valuations. Everyone that already holds the asset that doesn't need to do that, though, no, I don't think they're going to get hurt at all. So that's why that's a big gamble. That would assume that we have a lot of apartments that are turning over paper that can't, and that's going to put them on the market or suppress prices. I know it's a long shot, and I know I'm saying right now it's probably going to be wrong, but I think the end of this year we're going to have a lot of commercial real estate asset getting that. I include storage with that. I think a lot of people have put it off, and they're not able to anymore, and they're going to have to turn over paper, and we're hoping to buy a lot in final quarter. A lot of people, I think, were holding for rates to come down, and it's just not happening.
Jay, you want to say something to this? You're waving at me.
Yeah.
Why are you waving? Everybody can see you wave.
I want to respond before he goes to you, Mauricio. I completely disagree.
So do I.
Awesome.
I don't know if I think there's a whole
Why?
segment though. We might have to argue
Jay
this
and
in the next.
Kyle not at all agree with that statement.
I don't know.
let
Maybe
me-
because this is what we do full time, and we have all the statistics, and you're just going based off of, oh well, there's got to be some people who are hard up on their loans right now, so it's going to do awful.
Well,
So
I'm not going to base
that's
it on.
not
I'm not
true
even
at
going to
all.
base it on statistics. I'm going to base it on there are two things that drive multifamily values, and all commercial real estate: NOI and cap rates. And it's actually three things because NOI breaks down into income and expenses. So three things that drive commercial real estate: income, expenses, and cap rates. You look at multifamily, and three things are true. One, rents are starting to increase again for the first time in about a year. So on the income side, we're actually seeing growth for the first time in a while. On the expense side, expenses are still higher than rent growth. Expense growth is higher than rent growth, but expenses are coming down. Insurance prices are coming down. Property tax growth is coming down. Labor and materials through inflation, just general inflation, is coming down. So income's up, expenses are down. Cap rates have been where they are. They haven't moved in about 2 years, but I suspect that the next move is going to be down. So, I mean, from all three sides of this, income, expenses, and cap rates, I think multifamily is well poised. I think office still has a long way to go. The problem with office is that there's a lot, and let me bring this up real quick. I wasn't going to bring this up, but
While you're pulling that up, Kyle, for the statistics part, what percentage of all commercial real estate loans that are turning over this year are multifamily?
Oh, it's probably pretty high. 60, 70?
43, almost 50%.
Yeah, I was gonna say not that
all
high.
commercial real estate.
yeah.
So in 24 to 25, half of all commercial real estate loans that are maturing are multifamily. So in any real estate, in commercial real estate asset class, they're obviously poised. There's a lot.
Yeah, but that's probably just in line with how many loans are out there in multifamily versus other asset classes. So I don't think it's anything
lot.
abnormal.
So,
All right, Jay, what are you showing us?
yeah.
Hey,
So
what are you going to bore us with?
according to the New York Times, there was an article yesterday all about, and not saying according to the New York Times, but there was an article in the New York Times yesterday with data. Basically, banks are still selling off office loans because they're concerned that the worst is yet to come. They're worried about liquidity. And so they're writing down these loans. They're selling off these loans. And I suspect that the banks know more about what's going on than we do. And the fact that they are still, or not even still, but they're starting to write down these loans and sell off these loans is indicative of the fact that they're still concerned about office. So I think office is not as perilous as it was a year ago or 2 years ago, but I think we're far from the finish line there.
I concur with that. Mauricio, what do you want to follow up that with?
Yeah, well, here's the problem with basing things on statistics. There's
Oh, here we go. The three types of statistics.
Only three types of lies in this world, Jay. There's lies, there's damn lies, and there's
Attorneys. Oh, did you say something?
Hey, Jay, let me ask you something. You mentioned the three big: NOI, expenses, cap
income,
rates.
expenses, and cap rates.
Income, expenses, cap rates. Where's debt fall into this?
Expense.
Well, it's usually below the line, right? It's usually below the line. So you get NOI, and then below that is debt. I agree with AJ that one of the biggest, I mean, I think, again, multifamily is an asset class in and of itself. When you look at rents, those are strong. Occupancies, those are strong.
Fine with that.
It's the debt. The debt's the problem, which is one of the reasons my world, and your guys' world, but specifically my world of syndications is in trouble. It's not because the asset itself is in trouble. It's not that they can't get the rents or whatever. It's just they can't pay the debt. The debt burden's too high. Their insurance has run out. And so the issue is really with the debt piece of it.
Yes.
And to your point, AJ, you said I didn't know the stat, 43% or whatever. But do you guys remember back in the 08 financial crisis that we had this big issue with CDOs, the collateral debt obligations?
Yeah.
For some reason, they just changed the name. And now they call them, instead of calling them collateralized debt obligations, now they call them collateralized loan obligations, CLOs. But those have been in huge distress. The distress rates jump now to, I think, almost 10%. Banks are starting to unload a lot of these assets and a lot of these loans. We talked about it, I think, last week or maybe the week before about Washington. I think it was Washington Bank unloading a bunch of their loans. So I just think this is going to play out over the second half of the year, maybe the first quarter of next year. And to AJ's point, that's gonna people have to people have to sell their assets for selling. People are waiting for interest rates to come down. That's if it does happen, it's not going to be a huge amount. So people are going to be forced to sell. And right now, people are doing loan modifications. They're doing this kind of extend and pretend thing. And at some point, it's going to catch up with us. Again, the issue with the prediction show is like, is it going to be at the end of this year? Is it going to be 2025? Like that's the timing is a little bit off, but it's definitely going to happen sooner rather than later. And it'll be interesting to know where we're at. In terms of my prediction, Cox, I know that's what you want. Again, this is where I'm confused. Like, are we starting like office, for example? I would have said, I think I said something else. I think I said multifamily last time, but office, are we talking from here to the end of the year? Because I think office has already bottomed out. Like, I don't think from here to the end of the year, office
to the end of the year.
Yeah. So from here to the end of the year, office is not going to be the worst performing asset. It's already been clobbered. Yeah. So it's not going to get that much worse. But I think I'm going to go with AJ. I think AJ stole a little bit of my thunder, hot take, whatever. That was going to be my thing as well. So I'm going to go with multifamily as probably the worst performing for the second half of the year, starting from today.
Hey, Mauricio, we have a question here in the chat. Somebody wants to know if AJ is right about multifamily.
From Mauricio's biggest fan? Wait, is it from Mauricio's biggest fan?
No, this guy's not a fan, clearly.
Okay, cool.
He said you need a not so deep V-neck. No, I'm kidding. He said if AJ is right about
my hair, I'm gonna show all my hair. Right, AJ and I have a hair competition to see who can show more hair, and I usually lose, and so I gotta go with the deeper.
Yeah, all the hair that would normally go on a person's face ends up on Mauricio's chest instead. So
gravity. So AJ, Mauricio, if AJ is right about multifamily taking a dive, are you going to go back to doing asset protection work?
Ooh, I'm retired from the asset protection work. I'm pretty darn good at it, but it just doesn't pay the bills as well as it's like buying insurance. That's the problem. I got to convince people to pay insurance to go do asset protection. So no, that's a good question, but no, we're already in the thick of things, man. So it's survived till 25. We've actually done pretty decent actually over the last. We've survived pretty well. So we're looking forward to next year. But no, I'm not going to go back to asset protection. But if you want asset protection.
Read the book. That's what he's saying.
Legal strategies for everyone.
Read the book.
Sorry, I don't have your book nearby to throw up on the screen. All right, one quick thing before we move on. AJ, do you know what the delinquency rate is in multifamily right now?
No, off the top of my head, no.
Less than 2%. So of all those loans that are in trouble, it's less than 2%. Just throwing, I know you don't care about stats, but just throwing that.
What percentage of those have been modified and extended? What percentage of those have been extended and modified in the short term?
I'm just saying delinquent. I can't drill into every single loan.
If you extend a loan for 3 months or 6 months, what happens after 3 months or 6 months?
Well, that's actually a good point.
How does that do anything to affect my prediction? I don't understand.
Well, it's a less than 2% delinquency rate, and you think that all of a sudden it's going to it's going to be the worst performing real estate class. Delinquency rate in lodging is 5%. Delinquency rate in office is 6%. Delinquency rate in retail is 6%. Mm-hmm. The only better delinquency rate is industrial. So just throwing that out there. Okay, let's move on to. So we already did kind of home prices, so we could skip over that, right? How we think we all think home prices are going to go up.
Is Kyle grumpier than usual?
No, normal amount.
No, I'm always grumpy.
Right.
I'm just it's drinking beer. It's not going down as fast. It's a really thick beer, so like I gotta get this down and then maybe have a second one.
When he's wrong.
Can we do an audience poll real quick?
Here we go.
I need to do an audience poll. I have to decide between opening the bottle caps or the peeps, and I know neither of them are optimal. I know it's the only.
Where do you get these from? Is this from some like
this
foreign
Peeps
grocery
was from
store?
Easter. Peeps was from Easter. Bottle caps was some random gift basket. And I'm not saying that either of them are good, but these are my only two choices, and I feel like sugar. So do I go with the peeps or the bottle caps?
Peeps.
Audience poll.
They're disgusting. Go with the peeps.
Yeah, peeps. I don't even know how people keep buying those. It's a weird trick. It's the same thing at Halloween. Those orange, those little orange pumpkin things. Like they're disgusting, and people still buy them. All right, let's move to 10-year Treasury. 10-year Treasury, and we'll lump this in with single family mortgage rates. So 10-year Treasury. Currently, actually, I should probably check what it is exactly today. 10-year Treasury is
4.23.
4.238.
No, I'm sorry.
Do we think that's going to be higher or lower at the end of the year? And then therefore, Currently, the average mortgage rate is at 6.87. So we'll put those two predictions in together because they kind of mirror each other. And we'll start with Jay on this one. Where do you think those two are going to end the year at?
So I'm surprised that the 10 years is as high as it is. I was very surprised when it got close to 4.75 a couple weeks ago, and so it's nice to see it back down below 4.3. I think we'll definitely be lower by the end of the year. I don't remember what I said back in January, but I'm going to go with under 4 at the end of the year. I do think we're going to see a rate cut, and I know I'm getting ahead of myself here on this discussion, but I think we still will likely possibly see a rate cut this year, and I think that'll drive the 10-year down a good bit. So I'm going to say 3.8 by the end of the year, and then mortgage rates. I keep saying 6%. I've been saying 6% for 2 years. So, well, I'm not sure if I believe it anymore.
Except for the last predictions episode, you said 5%. So that's a complete lie, what you just said.
I'm sorry. End of last year was 6%. So I'm going to go into this year 6% again. So 3.8 and 6%.
Okay. Just for the record, we all thought it was going to be around 5% by the end of the year. So I'm assuming everyone's going to adjust that a little bit. Starting with AJ, what do you think? 10-year and the single-family mortgage
down
rate?
A little. At the beginning of the year, I thought there was a chance that the Fed wouldn't do anything. That this whole idea of the 3 rate cuts. I thought mortgage rates were going to come down. I thought that I'm actually surprised at how, because I didn't think the Fed necessarily had to do a lot and we could still see mortgage rates come down. But I don't think we're going to get tons of easing at all. I mean, it will though. I like J 3.8. It's not terribly big change, but 3.8 to 4, right about there. I mean, I'm not. I'll go with 4. I'm fine with 4.
Four is a good one. In line with the Fed reducing by a quarter point, that ended up right around 4. 4 is kind of a technical hurdle too. So
yeah,
that's a good prediction.
Up above. As far as mortgage rates go, I'm still putting it. I mean, maybe a little higher, just because I'm shocked at how much they weren't affected. I didn't think the Fed had to once again change a lot, because we've seen the Fed, even when they were rising, we've seen mortgage rates come down due to demand. And I think with the wars and stuff, we could have an honest shot at that, even if the Fed's not very strong. So I'll go with, since it didn't affect as much, 5.5.
5.5.
I still think they're going to be. We'll see ease though.
Yeah. So if I'm reading that right, then you think that they're going to bring spreads down.
Yes.
Because that would be historically. Yes. I mean, historically spreads are less than 2, but not quite as low as what you think. So banks are going to get a little bit more aggressive, is what you're thinking.
Yep.
1.7 is historic spread.
Yeah. Mm-hmm. Mauricio, where you got?
As you guys, if you've listened to all the episode, I think there's less of a correlation between the Fed funds and the long end of the curve, 10-year. I mean, obviously it affects the 2-year and obviously the shorter end of the curve a lot more. And then mortgage rates are tied more to the 10-year. So, but I do think 10 years are going to go down, because 10 years to me matches sort of the growth and inflation expectation. I think that expectation is going to start going down. I think people do believe that we're going into a recession towards the end of this year and towards the beginning of next year. So I anticipate the 10-year to go down, not because necessarily what the Fed's doing, but just because of the way the economy's going. So I'm not completely against it going down to around 4%. But the idea of the Fed's cutting, even if they cut 0.25%, for that to be a 1-to-1, like that doesn't make any sense to me. So if the Feds are going to cut 0.25, or even if it was 1, it would be like barely a move on the 10-year. But I do think the 10-year is going to go down, because people are going to be buying more bonds and a flight to safety as the recession comes. So I'll say 4, just to throw out a random number. And did we say historically the spreads are 1.7? I guess I got to go with 5.7 then on the mortgage.
There you go. So I agree with you when you say that. I'm going to agree with Jay's number on the sub 4, but I think it's going to take 2 rate cuts to do that, and I believe there's 2 rate cuts, because the baseline right now is 1 rate cut. So it's at 4.25 basically right now. with everyone assuming there's going to be one rate cut. So if we end up only having one rate cut, then logically the 10-year treasury is going to stay where it is. I think it's going to take two rate cuts, but then people will overcompensate like they always do when they, it's outside of what the expectations are, and it's going to drop below 4. So I think it's just going to get just below 4. Technical levels are usually like 3.8, something like that. So it'll bounce between 3.8 and 4. And that will put mortgage rates at that 5 3/4 kind of thing. So that's where I think it's going to come in at. I'll roll that into since I already.
By the way, I want to give a shout out to Wanalock. He's coming up with these great ideas for drinking games. Every time somebody references a book, or every time Jay eats a candy bar or something. So we should think about that for future episodes.
Or every time AJ touches his beard, because you'd be drinking right now.
Dude, we'd be hammered. We'd be drunk.
Yeah, that's gonna be bad.
So let me just say, for everybody that's watching this, AJ is absolutely freaking out right now, because normally he spends 90% of the show when he's not on camera combing his beard, and he knows he can't do it because he's going to be on camera the whole episode. I guarantee you, AJ is
Hold your hand up, AJ. Hold it up. Is it steady? Is it?
It's shaking, baby.
All right, I'm going to roll this into prediction on rate cuts, because I already said I believe there's going to be at least 2 rate cuts coming. I think what everyone's saying, there's one. We've talked about this in previous episodes where I said that the unemployment rate's already at 4%, and they believe that the 4% is going to hold all the way to the end of the year. There's no chance in my mind that 4% is going to hold. I think it's going to go up, and when it goes up, that's going to lead to rate cuts. So I think we're going to see at least 2. I don't think September's off the table. Like everyone says, it's too close to the election. I think we could have a rate cut in September. So 2 rate cuts. Jay, what do you think? How many rate cuts are we getting?
0 or 1. I see 0 chance of 2. I don't think we're going to see anything before the election unless there's some major move in the economy, which could happen, but it's not looking like it as of yet. And so that leaves November, December. And I think if we need one, we'll get one in November. And I don't think we'll see 2 this year. So I'm going to go with 0 or 1. If I had to pick one of those, I will go with 1.
Okay. Mauricio?
This is interesting because, the Fed's in a really tough spot, I think, because, usually when you got these inflationary issues and, they've already said they wanted to get like real estate prices down, and they've been raising rates time and time again. And real estate, as we just talked about earlier, hasn't budged. So it's like, on the one hand, I think the Fed, if it was up to them, they'd love to raise rates, because they still haven't been able to, that usual tool of raising interest rates hasn't really been working for whatever reason. But on the other hand, we have an economy now that's really debt-based and can't really function with these really, really high interest rates. And I think they're up against their backs are up against the wall, because you have all these loans, commercial real estate, all these things. This current environment is really problematic for them. I've been reading a lot about banks and the CLOs. I forgot the word, but the CLOs are in trouble. We got these distressed loans, commercial real estate's suffering. We're probably going into recession. So I think at first I said there was going to be absolutely no rate cuts. I may even increase it, but I don't think the economy can sustain it. I just see all these rumblings going on underneath.
But that's what people were saying all the way back in, like, when rates originally went up, everybody's like, the economy will be dead in 2 months if interest rates are 8%.
Yeah.
And it's just
and it's not. Yeah, and it's not like I have empirical. I'm just everything I'm reading, and it just seems like the things brewing, and the banks are getting more. They're unloading more and more of their debt. More of their debt's becoming problematic. They're selling off their assets. They're selling off their debt, and it's just like as you mentioned earlier,
government's printing money.
Multifamily, they're holding on for dear life, hoping and praying that interest rates go down, and if they don't, they're going to be forced to sell. And I don't even think a quarter point's going to really move the needle. Everybody's saying, oh, we're going to have 6 rate cuts. So it's got 1.5 to 2 points. And now it's like maybe you'll get a quarter of a point. That's not going to move the needle. So they're in a tough spot. I agree with Jay. I want to kind of go on a limb and say 1, because I think a couple months ago I would have said 0 when there was almost a chance of it going an increase. But I just don't think the economy can sustain it. And then I just think from everything I'm reading, again, I don't have a statistics thing, but all the
both you and Jay. I'm going to go out on a limb and say 1, which is exactly what the Fed said their prediction was 1. Okay, you guys are really going out on a limb on this. Well, AJ,
let me throw something else out.
Nope, we're moving on. AJ.
So I mean, I sticking with kind of how I thought. I didn't know that they would do any. I think that the idea that they have to was, I've been saying this forever, it's totally overblown. And I think inflation is, they're so overly concerned with it due to these social problems with it, that with everything that's going on right now, the Fed views that as a match that could just make everything go up. And so I think they are so afraid of inflation and the pressure that that would put on American citizens during this election cycle and what's going on right now, that they are going to wait too long. And I think that they've had opportunity, they've had data, it's too scary. They waited too long to increase rates, and I think they are going to wait way too long to drop them until they have to. So
now show me 4.3, 4.4 unemployment, and then you think Powell's going to stand up there and saying, "Oh, everything's still fine." I think he's cutting. Okay, we're gonna.
I think you guys didn't listen to last week's episode. Inflation's coming down.
It's there.
I think the Fed is thrilled right now. This is literally the best situation they could be.
They also predicted that unemployment's going to hold at 4%. There is no way it's going to hold at 4%.
But the key is that right now they are not pressured to do anything. Inflation is, data says it's softening, so they're not pressured to raise interest rates.
Okay, next month 4.1 pressured.
I don't think so.
No.
Month after that 4.2 pressured.
Then
Yeah, exactly. We got a lot of months before, and I don't see it coming down.
They do want asset prices to come down, and the real estate market has not come down. The stock market has not come down. All those asset prices have not come down, and that hurts. I mean, I just talked about it. The in the last year, or since COVID, 30% of the sales have been from new home buyers. Those are the home buyers that are paying way more money per month on their mortgage. And that's just the mortgage. Forget about all the other stuff. And I think the only reason they're doing it is because banks are having to extend and stretch. Like instead of having a 33 or 30% debt to income, they're stretching it to 40 to 50%. It's just not sustainable, and that's a concern long term.
Okay, let's move on to the next section. Couple shout outs along the way. Shout out to Igor from our local dig meeting. Good to see you there. And then it looks like Jay gave out a shout out in the chat to Elvin. Shout out to Elvin. Thanks for coming, guys. Recession. We talked about this. We were all kind of talking at the beginning of the year. We thought a recession might be coming this year. I think that might have changed for at least a few of us. So I'll go right back at AJ again. AJ, do you think there's going to be a recession this year, or do you think it's going to happen at all, or do you think soft landing achieved?
So this comes back to that conversation we had a long time ago where we found out we were in a recession in 2007 and 2012. It takes so long where nobody thought they were in a recession in 2007. They go back and edit it. So I think there is a very good chance that we could end up in a recession in the fourth quarter, but we won't know it. We're not. I don't think that. I think it will. We have to go back and put it. So I think that there is a chance that we could. I think we're kind of in a silent recession. Honestly, I think that it's how we look at assets, how we look at GDP growth, the percentage of it in which the U.S. government now even is. I mean, if you take out performance, things like that, we're kind of in a silent recession. It's weird. Asset prices are rising. We don't have massive jumps in unemployment, but I actually agree with you, Kyle. I think unemployment is way worse than it looks. I think it's driven by part-time jobs, everything else. But I think if we do, it'll be in the fourth quarter, and I don't think we'll know it this year.
Fair enough. Jay, what do you got for us?
I'm just sitting here thinking about the fact that somebody
sitting there chewing on your peeps, and you got a mouthful, and you're not ready to answer. I got
chocolate caramel. No, I'm ready to answer, but I'm looking. One of our live stream listeners is feeling left out, so he's about to eat a 100-gram bar, and I'm just sitting here thinking, people really eat 100-gram bars? Vote amongst the four of us. Who here has ever had a 100-gram bar?
I've had one.
I've had
They're pretty good.
bar. They're great.
Yeah,
really, they're good.
Yeah, they're good. They're kind of like back in my hometown in Canada. They have like Mr. Big bars. They're kind of the same thing.
Canada, eh?
Canada's a country. It's not a town.
Back in my hometown in Canada, not of Canada.
I'm gonna stick with the exact same thing I said back in January. I still think there's going to be a softening. I don't think it's going to be too bad. I don't think it's going to be earth-shattering. I think we're already seeing unemployment go up, which is not unexpected. We're already seeing GDP drop, which is not unexpected. I suspect that we'll probably see home values soften a little bit. I suspect that we'll continue to see jobs and GDP erode a little bit. And I think it also goes back to, I think it was Mauricio a week or two ago who pointed out that a lot of what we're seeing now is recency bias. We feel like things are getting back to normal, but back to normal these days feels like horrendously bad because compared to where the economy was a couple of years ago, things are a lot worse. So I think we'll see what a lot of people will consider a softening. But I think if we look at the data, I don't think a recession is going to be declared at any point for 2024.
Mauricio, what do you got?
I'm going to be in Canada tomorrow. Did you know that?
No.
Yeah, I'm going back to Kelowna.
It'd be a lot cooler if Edmonton had won the cup last night, but all of Canada would have been.
Last time I was in Kelowna, it was like snowing, and now it's going to be summer. I think there is. I mean, we may already be. I was just looking at the statistics here. The U.S. recession probability. They're already hovering around 60% or 70%. So it's not earth-shattering to say there's going to be some kind of a recession. So I mean, everybody talks about survive till 25. You know, I do think we're going to have a recession between now and I don't know if it's the end of the year or not, but certainly before the first quarter of next year. But to your point, we may not know about it until later in the year. But the recession's coming. It's just a question of how deep, how bad.
Well, it's also a question of what the Fed does too, right? Like if they start to, if we start to see 4.2, 4.3 unemployment, then they start lowering rates, they might stave it off. But if, to AJ's point, they're slow to act always, then, you know, if they wait and don't do it right away, then they're going to miss their boat and they're going to hit that recession.
Dude, if you're waiting for the Fed to help you out on a soft landing or whatever, you're in trouble.
That was their job, wasn't it? That was their entire purpose, was to try and create this soft landing.
Yeah, how is that? And how many times have they done soft landings? How good are they at that?
So far on this one, they're doing a pretty good job. I'm not saying they get credit for it. I mean, I think they've gotten lucky, but so far,
okay.
I think
things have Go ahead.
Things have played out, I think, absolutely better than anybody expected 2 years ago.
I'll give that. I keep thinking things are going to get worse, and they don't. So a lot of Fed's actions are going to have to do with inflation rate, and the Fed pays attention to their main number is core PCE. So let's do a prediction of where core PCE is going to be at the end of the year. AJ last time had at 3%. And the other guys were right around 2.5. Both are possible right now because we are stuck at 2.8. We've had 3 in a row at 2.8. So it could sneak back up to 3%. Also depending on the election, how people think and how they're going to spend based off of that. So I'll come back at AJ to start. Where do you think core PCE inflation is going to end up, considering we're at 2.8 at the moment?
I'm sticking with 3.
Sticking with 3. Think it's going to bump back up? That's not that bold of a prediction. A lot of people agree with you. Jay, do you agree?
I don't remember what I said last time, but
2.5.
That I was going to say 2.5 is still my number. I think we're seeing a softening in inflation. I think we don't know for certain that that's a trend and it's going to continue. Maybe last month was just a blip, but I think that we're going to see a downtrend over the next few months, and so I'm going with 2.5.
Mauricio, you had 2.5 as well. What do you think?
3.15.
Ooh, you think it's coming back up already? Any reason, or are you just a gut feeling on that?
I just think I don't know. I think inflation's not fixed.
This is where Mauricio is supposed to say, regardless of what happens this year, I think we're going to see inflation at 10% by the end of the decade. Say it, Mauricio.
Exactly.
Say it,
Broken
Mauricio.
clock.
I mean, inflation never goes in one direction. That was my point before. So I'm glad you brought that up, Jay. Like inflation never goes up or down in a straight line. It'll go up, it'll go down, and then it'll go back up. I mean, we could go negative, and then we can go back to 10%. I'd like to go back to what our bet was, Jay, because that's the more important one, which is like, what are we going to see first? It was either breaking the 9% or whatever it was before, or does it go
2%?
I forget what our bet was, but that's more interesting to me. Like, what are we going to hit first? Are we going to go higher than our highest point, or are we going to go,
below
what's the
2%?
number? Are we going to hit 2% or 2%? Are we going to hit 2%?
I definitely think we're going below 2% before we go back up.
Yeah, I'm gonna go with AJ or with Jay on this on the 2.5. I had it going lower, but I thought we were gonna go a little bit faster on this, and the Fed has been dragging their feet to what AJ was saying. But once again, this just comes back to this owner's equivalent rent. I think it's such a lagging thing, and housing costs have been down for a while. We're actually just seeing as Jay pointed out with the multifamily earlier, we're just seeing it come up finally now, and this inflation rate that the government has put out has shown 6% increases for a while, and that hasn't been happening. So I just think that lag effect is going to kick in, and we're going to come down. But now that we're halfway through the year, I don't see 2.5 or 2% coming. So 2.5 by the end of the year, I think is a very conservative guess.
Can I throw up a really important chart real quick?
Yeah, go for it.
So if we're going to talk about inflation, I think we'd be remiss not to focus on.
Oh, here we go. I know where this is. Yep, I knew it.
So egg prices.
Are we going to do a prediction on it?
Let's do a prediction. So they hit a peak in December of 2022 at about $4.50. I was going to say a gallon, but I think it's a dozen. Dropped back down within a few months to $1.08 a dozen. Now we're sitting right around $1.95 a dozen. So where are we going to end the year? Higher or lower?
No one wants eggs. I think they're coming down to $1.50.
Wait, hold on. We're talking about grade A large, right?
These
and only white. AJ only does white eggs.
He's in Idaho.
That's all we got.
Yeah, there's no dark eggs in Idaho.
Nope.
It's horrible. We love you, AJ.
AJ doesn't even contribute to this graph because he makes his own eggs, don't you? Don't you have a bunch of chickens on your property?
We have a bunch of chickens. Very diverse group. We have blue eggs and brown eggs and all sorts of different colored eggs.
And he also,
a lot of different gendered eggs too.
Very progressive.
bunch of chickens. AJ also engages in a severe child labor. Probably violates a bunch of child labor laws.
You better believe it.
Not only does he put the kids to work, but he doesn't even pay them either, right? So.
No way.
But he lets the eggs.
Strategy. Where are the tax strategy? You know, you can pay your kids up to like a certain amount. I think it's 13, 14 grand, and tax free. You should be paying them for the egg work and the.
I throw it into
Roth IRA.
Yeah, AJ pays them, but then he makes them pay for their own health care and pay for their own child care and all those different things. So
yeah, no free ride.
Yeah, there you go.
$13K a year, throw it into a Roth IRA, grows tax-free forever.
Quick segue. Quick segue here. Chad before wanted to ask, or was it Chad? One of these people wanted to ask, are we going to have merch? Doug wanted to know, are we going to have merch? So he saw these mugs. Obviously, everyone wants the mug, the Stein. So Jay, are we going to have some merch that we're going to have for sale here, or is this just a one-off?
Giveaways. Okay.
We'll do some giveaways. I will take the action over the next couple of months to figure out the merch situation.
Couple months.
Yeah. CTA. Isn't that what you and Ashley would like to do on these meetings? CTA for this is
call to action
for the merch.
How about ETA? How about ETA?
ETA is sometime, and it's the same ETA as your call for when we're going to hit 9% inflation sometime in the next decade. All right. Are we going to do stock market, or are we just going to accept that we're awful at this? Because we were awful at it last time. We were so bad at it.
Let's do we each get 5 seconds to give our what we think is going to happen with the stock market.
Up.
Flat.
Down.
We got them all covered.
It's gonna hit an all-time high of 5,000.
It's already at
It's already
5,500.
There.
We use the S&P and it's at 5,500.
Yeah.
I'll talk about the Dow.
All right.
I'll talk about Dow 5,000. Is that
Yeah, Dow
too
5,000. We're going to hit that in the last 30 years.
Okay. More importantly, gold was actually, we have to hit gold because Mauricio under predicted gold. Mauricio said it was going to go up 10%. It's even more than that. It's up like 15% over the last 6 months.
And
So
I have to give props to Mauricio, who had a great quote on the last predictions episode where we were talking about how much gold would go up or down, and he said he thought it would go up 10%, but then he said it doesn't matter because everything else is going to be down.
true. I was trying to give him a win here, Jay. So just because his reason was wrong doesn't mean he wasn't right on the call. But do we think gold's going to keep going up, or is it kind of, it did such a run there, like it was like 15% in a matter of like a month and a half. So like, do we think it's done because it's been kind of bumping along that 2,300 for a while now?
Still going up. Dollar milkshake theory.
That's fair. Well, and we got a lot of wars and foreign elections and stuff going
I
on.
agree.
So I think this is a really tough one to predict because it's we got a lot of foreign stuff going on. It's tough enough to predict what the Fed and the government here is going to do, let alone what foreign powers are going to do. So I think it's just going to hold for a little bit, and then maybe we'll see with the election. Well, who knows what after this election if people are going to be scared or not.
Are we doing predictions on that?
You want to do that next?
Yeah.
Let's go election. So first of all, we did this. We've been doing this for a year now. You want to hit your gold, Mauricio? All right, go with your gold, Mauricio.
Am I not part of the gold prediction?
I left like a dramatic pause and you didn't step in. So I thought you didn't want to do it. You were just sitting there with a sheepish look on your face.
I was looking at the chart to point out that since it's the low of last October or September, it's up like 35%. It was at 1834 in October, and now it's at 2332. It might go a little bit high. I don't think it's going to be substantially higher. Maybe 20. The question would be, is it going to break 2,500? That's a good over-under. I'm going to say it's going to break 2,500, but barely.
Before the end of the year?
Yeah.
Yeah, to me, that's just a war prediction, honestly. Like, how are these wars going to go? And could there be a new one? We got an election in Thailand coming too. Like, how's that going to affect, foreign policies with China and stuff like that? So who knows with that? All right.
Thailand or Taiwan?
Hey, how long
Taiwan.
Is this
Sorry, did I say Thailand?
How long is this episode going to go for? Is this like a 3-hour show or a 2-hour show, or how?
We're not. We're barely since the intro. We're barely at an hour right now. So calm down. Like, okay. Election. We've been predicting for like a year the election, whether or not who are going to be the candidates. The last time we talked about this, Mauricio thought that Trump was going to have to bow out due to legal issues. Do you still believe Trump is bowing out due to legal issues, or do you think that's kind of behind him?
That's a skewed question, because I've been hearing a lot of rumors that really that might be the Gavin Newsom thing. Like, they're still talking about maybe Biden bowing out. Remember, we had that debate of who was going to be.
Don't change the subject. We'll get to Biden for after this. We're talking about your prediction that Trump would have to bow out because of his legal issues.
Unless he gets thrown in jail, which I don't think that's going to happen.
I think even he's not getting thrown in jail, and even if he did, I don't think that would matter.
His attorney came out and said he would continue to run from jail. Yeah. So even from jail, we would see him.
He's gonna, though. I mean, I have not been following super closely, but from my understanding, I think have already appealed. So I think pending appeal, it'd be very rare for him to be thrown in jail, and the appellate process is not going to be resolved by the end of the year. So he's not going to go to jail. So I'm going to say, yeah, there's nobody else anywhere near the guy. So he's going to be there, and he's going to be there. Whether he's going to win or not, I don't know, but he's going to be there.
Okay. Are we consensus among the group that Trump's going to be the candidate? I think. Yep.
Yes.
Okay. Now let's move on to Biden. We'll start with AJ, just because AJ, I love AJ's political opinions. So do we see Biden?
I mean, you'll see him. You won't understand anything, but you'll see him. Yeah, I still think there's a really good chance that he bows out.
I agree with that. I mean, it's coming up though, right? What was it, July 11th
Wall
or
Street
17th or
Journal
something?
article, whatever
August.
that was, 3 weeks ago. That was bad.
So
And when this podcast comes out tomorrow, then we got one day to the.
Live, Kyle. It's live. It's live.
Okay, well, there's a lot of people who are going to be listening to this after. We only have like 17 people live, so when it comes out,
the other five will listen to the podcast, but for now, the majority are here.
we're over 20.
we're over. Okay, so Thursday. That's I'll just specify Thursday. That's when we see the debate. So who knows? We might have a Mitch McConnell freeze up from Biden, and that's the end of him. But who knows? I tend to agree with AJ.
What's the debate? For those of us who are out of the loop, who's debating who on Thursday?
You serious?
Really?
I'm dead serious.
The first presidential debate?
The first presidential debate with mute buttons and podiums.
I had no clue. Cool. Okay, cool. I do know one thing, though. I know that we're missing the U.S. No, it's a Chile match. Sorry. It was the Chilean match was going on right now. No, I have no clue.
Jay, do you think we're going to see Biden, or do you think he's going to have to bow out?
I'll let you know after Thursday. I think that will be the determining factor. I think right now, unfortunately, I think we're going to end up with Biden and Trump. I personally would vote for any reasonable centrist third-party candidate. And no, we
Kennedy?
don't have one. We don't have one right now. Over either of them, I honestly think either party could win if they replace their candidate.
That's fair.
And I think
I agree 100% with that.
Yeah.
Absolutely.
I think there's zero chance that the GOP is going to do it.
Nope.
I think there's a very small chance that the Democrats will do it, but I'm hopeful they will. The question is, who would they put up? And unfortunately, I don't
Well, I
think-
know Dwayne "The Rock" Johnson is an avid listener of our podcast, never misses a podcast. So I'm going to put a plea out to him. Please run either party. Doesn't matter.
I'll
I'd love
take
to
The
have you
Rock.
as the
Come on,
president.
buddy.
Can I ask a
Mark
dumb
Cuban.
question?
I want Mark Cuban.
I'd
Can I
like
ask
to take
a
Mark
dumb
Cuban
question?
too.
Is Kamala Harris the presumptive VP for Biden,
is.
or is
She
that
is.
automatic?
She is. She's
It's
automatic.
not automatic, but it's not going to be changed.
Yeah.
Because my theory, I think it's I don't know. I mean, I think it's more likely that he runs, he wins, and then he resigns like in the first year, but then you're stuck with Kamala Harris, which I don't know if people want that either. So that's why I'm asking.
She has the lowest approval rate of any vice president in history.
Yeah, right. But then who cares? Like nobody has a choice. Like you just get the. But anyway. Yeah. I don't know. I didn't even know there was a debate. That's awesome.
When you say if either candidate puts up anybody else, they would win. I think if Biden bowed out and Kamala stepped up as the candidate, I don't know if she would be able to take on Trump.
No.
So that's the caveat to that comment. All right, that's all I got, boys.
Candidates.
We lost 3 listeners during that segment, by the way.
Let's lose some more.
So
with those two,
they just realized. They just
Which comment do you
realized-
think it was, when we made fun of Trump or made fun of Biden? It was. I'd love to see when the exact
Either
moment was.
one piss everybody off.
I'll piss everybody off on both
We
sides.
got to make sure we hit both
I'll
sides.
cover all our bases, guys. Don't worry. I got this.
You okay there, Mauricio? Big yawn.
Do we want to get even more political and say what's the chances that Hunter Biden gets pardoned?
0.
0. I agree.
You don't think so?
That would be.
I think he does. Biden's come out and said that he wouldn't. But let's go through the 2 scenarios. Biden loses the election, then you always have that little period, right? Like right before the inauguration, where the president goes and
Biden
pardons
loses.
everyone.
I think he will.
Yeah, so during that, there's no way to me that during that little period where all of a sudden they go on that pardoning spree where they pardon a bunch of people, he doesn't pardon his son. Like
If he loses, I think he will.
Yeah. So I think he does get pardoned. Okay, that's all I got, boys. You got anything else you want to make predictions?
With the 2 candidates before they do this debate, then they haven't debated at all this year. Who's your call? Who's winning? We haven't heard either one of them debate. We know who the candidates are. Who's taking it?
I don't even want to say.
So there was one poll, and it's just one poll, so it doesn't mean anything, but I thought it was interesting. There's one poll that actually has Biden winning Florida right now.
Ooh, hot
And-
take there.
And so just the fact that there's even a single poll that has Biden, and if Biden wins Florida, I mean, it's a blowout. So I'm not saying it's that poll is representative. Right now, 538 basically has it as
to me, all of these polls, like it's just like it's political bias. That's who's winning at this point. It's so close that like one poll says Trump, one poll says Biden. Like it's just way too close to call right now.
I don't really read too much of the newspapers, but I'm literally looking because I'm not kidding you. I had no idea they were debating. So I'm looking at USA Today, which is like a national public, like this is not like some random internet thing, right? And so it's got an article about whether Trump will chicken out of the presidential debate. Like, literally,
everybody's saying that there's still a reasonable chance.
They're not reporting like it's like an editorial already. They're chicken out, but it's CNN that's hosting it, and there'll be no audience, and then the microphones will be cut off, so only one candidate can speak at a time.
Yep.
Yeah.
And so there's a rumor that, even though Trump agreed to the rules, he may just be like, "Fuck it, I'm not going."
I do find
he bailed on a couple last year.
I do find it funny that now that Trump and a bunch of his people are starting to talk about, like, they're setting expectations for Thursday, saying that that Biden has a lot of political experience. He's a great debater, and he has a big advantage over Trump on Thursday, just given his experience debating. So it seems like a really interesting pivot from he doesn't know who he is and where he is to don't expect Trump to win this one.
Well, that's all negotiations 101. Come on, you never read his book? That's all about the negotiations 101.
Of course. But I think it's going to be. I'm not going to be able to watch it just due to secondhand embarrassment on both sides.
Oh, I'm so excited to watch it.
I know, me too.
So everyone's
so excited to watch it.
Not one person has answered.
I can't say I've ever sat through an entire debate, and I think I will sit through this entire one.
I think I probably will too, and I've never sat through. I didn't watch any of the last ones.
It's just to preemptively see the memes, right? Like there's going to be 1,000 memes after this from either side, and I'm just going to text my wife, be like, "Hey, you got to write a real estate meme of this, and get ahead of the curve."
All right. Nobody. So
there's one more prediction.
No one's going to say anything.
Okay, I'm predicting Biden because I think abortion is going to be another hot. Just like in 2020, I think it's going to. The Democrats will figure out how to get that to take center stage, and so I think it's going to be close. But
and Trump made a hard stance on that. He was on that one of our favorite podcasts, that All In podcast. He actually did a very good interview there. What you think of him? He was pretty good on that.
Interview, actually.
And he took a hard stance on there that he really thinks that it should be up to the states, and he's not going to mess with it. He's leaving it to the states, and that's his policy on it. So,
what's he supposed to do, though?
I think that's the right answer.
It's the right answer because it's already done. What is he going to do? Go against the Supreme Court?
Yeah,
right. If he said no, I'm going to change or do a national ban on abortion, or no, I'm going to take it back. He'd be going up against I think it's like, I can't believe it, but I think Trump's going to win.
Well, I have noticed over the last few months, like he's obviously getting coached and he's listening to them. That's the thing.
That's when I've heard his last few interviews, I was like, oh, I did not expect that.
He used to go up on stage, and you could see when he was reading the notes, and then he'd go off on tangents, and you'd be like, oh, he's completely off script. And you could tell the speechwriters off to the side, just like, he's not doing that so much. So if he could stay on script, that's kind of dangerous.
Well, his conviction's the reason why I think he'll win. If they wouldn't have convicted him, he wouldn't win. The moment they convicted him of 32 felonies, he went up in every single poll. And I think he's going to win because they convicted him.
All right.
Okay. We have one more prediction requested by our listeners. And I'll let Kyle start on this one. And it's an important one. Which country wins the Hockey Junior World Championship in 2024?
Please, Canada.
I'm going Finland.
Finland. Are you just throwing that up there? Because I don't think
I just made
Finland
up a name of a cold country.
I was
so interested to hear why.
I would have believed you more if you said Sweden, but I knew you were just throwing that out there.
Sweden didn't field as good a team this year, so their left center is he tours Achilles, I think. So they're down a man, and their big guy can't fight this year. Apparently he took one too many concussions, so he's on the bench. Does that sound real?
Tough showing at right guard and right tackle.
Is this field hockey we're talking about, or is this what are we talking about?
Lacrosse. We're talking about lacrosse.
We're talking about the Hockey Junior World Championships.
Yep. That's right at the end of the year, actually. It's right around the holidays.
Because if it's field hockey, I'm going with the UK. UK's got a good field hockey team.
Yeah, the UK. All right. Should we do a top 10, or we didn't do one last time, right?
No.
When we did predictions.
Let's do a game.
We're done with the predictions?
One more prediction. How many calories did I consume on this episode?
2,600.
I don't know if it's more than me.
That's probably about where I am, Kyle.
Okay. I'm going to do a would you rather. If you had to go to, because we talked about prison before, so I looked up something and I found some fun stats. If you, let's just throw it out a blank check. If you had to pick a state to go to prison in, which state would you pick?
California, because they'll just let me out.
Yeah, California. Yeah,
Well,
California for sure.
Well,
in fact,
I
they'll probably give me a job and they'll pay me.
I say that because I found a graph, or I found a map of how much each state spends on prisoners per prisoner, and it's astounding. Some of these states.
See, like I
It
said,
is
California.
Crazy. So, like, a lot of these states are right around 30,000, which that seems reasonable to me. The low, I think, was like in the teens somewhere, or no, 25. Is that 23? 23 is the low, but it goes all the way up to, in mass, it is $307,000 per prisoner. 307,000. I feel like if you gave a criminal 307,000, he could become an upstanding citizen because he wouldn't need crime anymore.
Quick Google search shows that the two safest states for prisons is New Hampshire and Maine.
Ooh, okay. Well, Maine is 117,000.
Yeah, I'm sure that's because think about who lives in New Hampshire and Maine. Like, think about the prisoners that go there.
They're basically Canada up there.
Exactly. They're all like polite and like nice to each other. And let me help
all
you
the
out
Canadians who got lost and went across the border, and Americans just threw them in prison.
Exactly.
They thought they were Mexicans crossing the border illegally. So I thought that was just a fun little stat there. If you're ever looking, wondering where our tax-paying dollars are going, apparently 307,000 per prisoner in Mass, and 128,000 in California. So interesting. All right.
Okay.
We gonna do plugs tonight?
We got to do plugs, and everybody that's still left on the live stream, I think there's about 20 people. Tell us if you enjoyed this, what we can do better, what we can do differently, if you'll tune in next time, if we should do it again. Give us some feedback.
Throw up any other last minute questions you want. We were kind of mixing questions in along the way. I was some of them already had things that I was going to say anyway. So, but if any last minute questions, we will maybe mix them in right at the end. But first, let's start with Mauricio. You got a plug for us?
I am going to plug my Instagram account since I'm still trying to grow that sucker. Putting a little bit of work into that. So at Mauricio Rauld, and follow me there.
Jay, what do you got?
I'm going to plug Mauricio's book and Ashley's book and AJ's book.
Dude, you're such a good guy.
Three drinks.
The Only Woman in the Room.
Legal Strategies for Everyone.
Legal Strategies for Everyone and Self-Storage 2.0.
2.0. I still got to leave you. I still owe you a review there, AJ. I'll get on that. Does it matter what you say in the review? Like, can I just post anything, or is it mainly the stars?
It does matter what you say. It helps with like
Pictures.
SEO.
Put a photo.
If you put a photo in too, that actually really helps.
Can it be a photo of anything? Like, does it have to be of the book?
No, it
Yeah,
could
it
be of
has to be
Ashley. Just put a picture of
verified.
Ashley.
Actually, that'll be great. I'll dress Ashley up and have her read it, and then I'll just put a weird, funny comment. Okay. Speaking of Ashley, actually, AJ, since we kind of just plugged your book anyway, but if you want to plug something else, go for it.
No, books all around. Cheers, boys.
Books. All right. Self Storage 2.0. AJ Osborne. Check it out on Amazon. And I'm going to plug my wife, her Instagram. I assume she's probably going to be live a few times here. She's on location at a couple of our properties right now. So go check her out, as she'll probably be posting from there at Badash Investor, YouTube at Badash Investor. And for everyone who was in this in the live right now, drop a comment, a subscribe, a like, all that fun stuff. Whatever it's supposed to do. Help us out. That'd be great. Okay. I'm going to pretend that my drink is gone. It's not. I refilled a few times of different stuff. I actually have. I moved on from the Golden Monkey. The Golden Monkey, I had to finish it. It was a tough one. I wouldn't recommend it to anybody. I love other Victory beers though. Summer Love is great. But I got to run and hit the head. So fun times, guys, on the live. Thanks for everyone for showing up. We won't be live next week, but
thank you.
We'll do this again soon.
We'll do it again soon. But check out for our next podcast next week at normal bat time and bat channel. And for my co-host, I will see you next Tuesday.
See you guys. Thanks, everybody.